His hands are short that it cannot reach to you. His eyes didn't look like he cannot see your teeth. His ears have no day that he cannot hear you cry. Your tomorrow must be greater than today. Your tomorrow must be greater than today.
Oh, thank you. Thank you. You know, I stay enjoying the song. It just color. Yeah, man. I don't know what's going on.
Yes,
Well,
I'm right here.
yeah, you're welcome. And just want to
Thank
say
you.
thank God that we can come again. Those of us on Facebook, wherever you are coming up, whoever that will be listening, I want to say you are most welcome. And again, welcome. My dear friend and partner, you are most welcome.
Thank you.
Alicia Stanley is an insurance agent, and she's here. This is our special guest today. And again, the partnership forum is all about talking about business, talking about promoting, especially when it comes to life insurance and different businesses. But today, again, we are here with one really a potential woman in the areas of insurance, and she will be talking about herself. Let me give her the opportunity and open up the floor. Welcome, my special guest.
Yes, thank you so much. I am happy to be here. Thanks for the invite. Well, insurance is near and dear to my heart after realizing the power that it has to
Oh, okay. You
to
know,
really do
I
things in someone's life. Yeah.
yeah, yeah. And can you just introduce yourself, and then we go straight into our meetings?
Yes. Well,
Okay.
I'm Allison Starling, and I'm working with a prominent mutual insurance company. And I have been doing this for quite a while. And more than that, as I said before, I'm very passionate about this because a lot of people, I
Mm,
have to say, that looks like me is not aware of what insurance really means. They know they have it for their car, their homes, but in
okay.
terms of insuring themselves physically,
Mm,
they are not aware of that. So I'm here today to see if I can enlighten someone or, possibly help one, if even one person, to understand a
yes.
little bit more
Mm,
on how this can be very impactful on their lives as well as, leaving a legacy for their family.
for the family. You know, I'm excited about inviting you. I was one of the other guy, Daniel, and I've been. This is something that is serious. I will tell you the truth.
Yes,
You
yes,
mentioned, my friend. You mentioned, we pay insurance for our car, we pay insurance for our
hmm
houses, we pay insurance,
hmm
and dare you not to pay the insurance for the car. You're not
yeah,
going to put it on the road.
exactly,
Now,
exactly. hmm
it can grieve me sometime,
hmm
as we talk about it, those of us who will be coming online, those of us who will be listening, life
hmm
insurance, especially with life benefits, the
Yes.
different life insurance, and she will be talking about the different, and why we're here for today.
hmm
But, it's very essential. What drove my attention, I have different live program. We just started in a month ago, and looking at some of the things when it comes to business partnership, and how
Yes.
can we collaborate in order to promote business, especially with this whole life insurance thing,
Yes.
because in some cases we have people who make money, live
hmm
life,
hmm
but forget about life insurance,
Yes.
personal life insurance. So I think it's very important,
hmm
because it is something that has to do with benefit for the
Yes.
next person, that maybe after you leave, even
hmm
as you're living.
As you live in. Yes.
Yes,
Yes.
and that's the more
hmm
interesting thing, because I
hmm
will tell you, my friend, people pay money, and they cannot see anything with the car.
hmm
The only thing they see is, even if they didn't have any problem with accident or something, but their life
Yes.
is very
Yes.
difficult. So we're trying to see how we can convene and tell people
Mhm.
this is very important.
Yes,
So
yes,
I have you here today because my passion is also being driven to it, and I'm very
yes,
serious about it. My community
yes.
is also affected. I have a cross section of some of the guys I talked to and said, "But why this guy? Why they carrying people around to beg for money?
Mhm. Mhm.
When this guy was living, was happy." Oh, my man, let me forget it. I said, "No, we got to talk about it."
Yes,
So,
yes.
so again, you are invited, and I want to go strictly to our program.
Yeah.
And again, I want to know what is life insurance and what are some of the more popular policies.
Well, life insurance in a nutshell, it is a contract that is between uh, an individual, as well as it could be an individual that owns a business that wants it for their business, and the insurance company, right? So it's a contract stating where the insurer promises to pay out to, like a death benefits.
Yeah.
And of course, they have variations of that to the beneficiaries of the
Mm,
person paying premium,
premium.
monthly or yearly or whatever period. But it really is a contract between an individual and an insurance company where the insurer promises to pay a death benefit or some type of variations to that benefit to the insured or to their beneficiaries.
Okay, and we'll talk about life insurance with life benefit.
Mm-hmm.
Yeah. So let me leave that because I will come back to it.
Yeah.
When we talk about life insurance and what like you said, the
Mm-hmm.
public policy and
Mm-hmm.
some of the things that as you listen, it's so side sometimes good information is very important to
Yeah.
clarify some of the things because some of us, all of us have this problem. Oh, I don't have to do it. I
Yeah.
don't have to do it. But it's talking about benefits, looking
Mm-hmm.
at your children and looking after you leave your wife,
Mm-hmm.
because some of the mothers would be like, well, I don't know where to go.
Exactly.
So
Mm-hmm.
one of the reason why this program is all about what I like about it is we need to promote it more, and we're going to be talking outside and not here, but it's
Absolutely.
serious because I will tell you the truth. After you leave, I tell people, I say, I pray to God
Mm-hmm.
not to go and somebody be telling my children, well,
Yes.
your father was so and so person. He was all that big mouth he had. Let
Yeah.
him you get up from here.
Mm-hmm.
Those of us who are listening, will you be in your grave to listen to people telling your children, whereas you could afford $50 a month, or maybe $100 a month, or maybe even
Mm-hmm.
25 or 30 to do something, but
Yeah.
because maybe you are lacking the information, now is the time for you to listen
Mm-hmm.
to the information, and you can contact her too. We'll talk about that later. But this is very
Absolutely.
serious. And again, I want to know the second question I have for you. I want to know something about why is insurance extremely important to have? Why?
And I'll tell you this, before I jump into that, there are just so the listeners understand that there are specific types, of
Specific time.
insurance that are very popular, which is the term life insurance, right? You have the whole life insurance,
Yeah.
and of course a disability, because if you physically cannot work, if you have a job, then you need to be paid or somehow be able to take care of the basic expenses that you have, at least that. So those are three main types. So when I
Okay.
talk about term life, it covers you for a specific term.
Term. Yeah.
Could be
Yeah.
10
Term.
year, 15 years, or 20 years, but you're covered for that period. And that particular policy only gives you a death benefit for your hearers and to cover for your expenses, which I'll go into a little further once you're gone. I mean, there are people that will say, oh, I am gone, and so what do I care? But that
Yeah,
is a
I
bit
don't care.
selfish. So we need to do better than that. We don't want to dig a hole to put our family that we are leaving, our children or
Okay.
grandchildren, to have a deeper hole to dig out of, you know. So we want to ensure that we provide for them. It can help with funeral costs, mortgage payments, you know, living expenses for who you're leaving behind that depended on
Yeah.
you and your income before, you
Hmm.
know. So it's a lot. There is whole life, and the whole life covers you for your entire life. And
Okay.
so the word, so that's more like a permanent
Yeah.
insurance
Whole
coverage,
life.
whole life.
Yeah.
And with that, a lot of people know of this because they get the death benefit as well as they get living benefit, where they can actualize loans from themselves, in essence, when they
Oh,
have a policy like that, can support them, whether it's through retirement or just, you know, have excess cash, or you planning to start a business
wow.
and so on. So that is one of the popular one also, the whole life
Whole
insurance.
life.
Hmm. So we have a couple of them. And of course, you know, the disability
Mhm.
insurance is to support you. And this is not just old people we are talking about. We're talking about anyone that's employed. You could have just got your first job, disability insurance. Now you have responsibilities. You want to
Yeah.
ensure you are covered in case you got sick. It's not just if you got in an accident or something. If
Yeah.
you got ill and you remain unable to work,
So
you
what?
know, as you were, then you would be
Hmm.
paid to cover your bills, you know, even if
Okay.
it's just your mortgage or your rents, your utilities, and some food.
Hmm.
But you have that until you're able to fully or to work
Wow.
again. And you never know how long that might take
Yeah.
you. It could be a year, it could be 2 years. And even with your job, you might be covered for disability. And a lot of people think they're covered with insurance and disability. But once you're not at that job, you no longer have that, as
Yeah.
well as the
Yeah.
disability that you're covered for with your job. It might just expire in 2 years, and you might be, you know, needing it for longer
Yeah.
than 2 years, you know. So these are just some popular ones. So to go to the other question, I believe that you have in terms of the reasons, or how much life insurance coverage does someone need. Uh, you know, it is not written in stone as to how much you're going to need, right? There are different reasons,
Uh-huh.
you know. As a matter of fact, I think I think that's the question you asked me, but
Yeah. But
I will go into that quickly because for insurance purposes, in terms of making a decision as to how much you need, you want to see what it is you have as your responsibilities right now. You may have a mortgage, as I mentioned before, that you have paid off some, but maybe you still owe maybe 200,000 or 100,000. You know, you want to ensure if you get a term life, for example, you are covering that in case you pass. So you
yeah.
want to get maybe a half a million, which if you're under 55, a half $1 million in coverage, just throwing a number out there, for example, you would probably pay 100 or $90 or $80
Wow.
if you're in your 50s. So that's
Wow.
how much exactly.
What did
If
you
you
what
go,
did wait a minute. Wait a minute. Wait a minute.
yeah.
What you just said. Listen to me.
Mm-hmm. Mm-hmm.
You if
Yeah.
you're in your 50s, you paid 80, 90, or 100 of, and then that your benefit would be at that kind of amount.
And so
Wow.
that is the coverage. If you buy a $500,000 policy and say you're 55, you're going to pay around, I would say exactly, if I was to throw a number out there, 90 something dollars,
Wow.
you know, in the 90s, but less than 100. Because I just recently did someone that they are 50 exactly 50, and they got like 600, over 600 thousand dollars coverage for $90. You understand? So it's just to give you an idea. I mean, if you're
Yeah,
younger,
yeah,
of
yeah.
course, it is even easier because the insurance companies consider you well, healthy. They're not
Yep, yep,
expecting you
yep,
to go
yep.
anywhere anytime soon, but we know it doesn't work that way, right?
Yeah.
But
Wow.
yes, so if you are taking out as a youngster just starting to work and you take out a term life policy, you can, which as I said, that is like,
Something like it.
I use the word cheap because I stand by it. I don't say a lot of things are cheap, but I would say that is a cheap policy to
Yeah.
have in the sense of what you're going to be paying for
Okay.
the policy and what you're going to be covered, with. It's like a lot. A quarter million for like a 28-year-old, it's
Wow.
like $13 or,
What you
those
what you
kind of money.
saying?
$30, under $30 for someone in there under 30 to get a $250,000. And you just never know for 20 years. You do not,
Wow.
as well as with our company, you can also transfer it. Say, for example, you want to get insurance, you want to get a whole life because it's something you want to have access to
Yeah.
loaning yourself, right? But right now, you may not be able to pay the higher premium. You can get the term life to start to ensure you're covered anyway.
Hmm.
And down the road, whether it's months or a year or whatever, you can
Yeah.
transfer it into a whole life, even if you're diagnosed with cancer, diabetes, they can't deny you since you already have the term life. Do you
Hmm.
understand? So it is like a safety net.
Wow.
So so
Wow.
it's awesome.
But, so those of us who are listening, actually, we've been talking about the insurance, and this is going to be a time where we
Yes.
talk about it. And we're going to talk out of here. This is a business time, and we're talking about promoting something for life for people who will benefit. It's and
Mhm.
as a human right consultant, this is why
Yes.
I told people that I said the community engagement believe that
Yes.
every individual should be protected by law and guaranteed by the state.
Yes.
So let us not only look at the way they should live, the way they should be treated, but let us also look at the way after even death or during
Yes.
sickness. These are all
Mhm.
the things that we need to be promoting.
Yes.
So this is why when you said that kind of money, and
Mhm.
somebody is going out there to spend just for a day,
Yes.
probably see some of the spending they do, but they don't care about the life
Yes.
insurance.
Yes.
I first of all, and I want to say to those of us who are listening, those of us who are listening, this is serious, and
Mhm.
we even if we get 1 or 2% for these applications or from this promotion, fine. But I know that what is going on right now, what we are doing here is about service,
Mhm.
and we are providing you information,
Yes.
guaranteed information that you can access. And I understand some people don't have those information, and some of us,
Mhm.
like you said, we say no, that I don't care. When I die, I'm finished, so I don't care what
Exactly.
happened behind. But let's
Mhm.
see. um when I did my research, and I
Mhm.
stay, I don't have to be corrected. I'm
Mhm.
not going to, so I'm not going to give the details. But I will tell you, if you look at the Westerners, the people who are real, the white people, the people who we call white
Yes.
people,
Are doing.
and we look at the guys who are black, and we always
Mhm.
put all the white guys,
Mhm.
but they always look at the future, the preservation. What
Yes.
would be if I'm not here, my children?
Yes. And the thing is that we have, I would say, the majority, or maybe 80%, 90% of our race then believes in God,
Yeah.
right? I'm putting
Yes.
that out there. And if
Yeah.
we do, then reading all these stories in the Bible, it shows us that there is always, the father is always
Inheritance
passing
for their
down the
children, children.
wealth
The
to
Bible
their
is
kids.
so lot of scripture will tell us
Mhm.
that we should leave inherit. Good father will leave inheritance for his children, children.
Yes,
So what
yes,
is the inheritance we're talking about? The
Yeah.
inheritance is not just education. And I will tell you, my friend, those of us who are listening with from Africa, we know that even if some people will tell you, some of the father will tell you, the only thing I can do for you is to send you to school.
Yeah.
That's what I will say.
That's what they say.
And it just ain't no, but we want to encourage you. This is all about information. And you know, we'll be going for break. You know, but I want to know, you know, well, in the life policy, we're talking about disability.
Mm-hmm.
Disability is not limited to physical challenges. It has to do with a lot different, maybe your eyesight,
Exactly.
maybe different thing. So can a person who is a disability
Mm-hmm.
already,
Mm-hmm.
okay, can they also go into it? Why
Well,
it is true that
that
they would not they were normal, they didn't do it, but then now they're affected, they are disabled, they don't have any way to get out there. Can
Well,
they?
if they're coming in, and that's a great question. If they're already disabled and they're after the facts looking to do an insurance policy, that is, for my company, I know it's not possible.
Okay, that's what I want to know.
It's not possible. Now, I can't even, God has a way of showing you things and ways around things, but up front,
Yeah.
it wouldn't be. That would be a marker for them to say you are already disabled. So what is it that we could do? The underwriters is not going to pass that at all.
Yeah.
And as you mentioned, disability also, it is not one of the popular insurance policy, but it should be, because all of us will hopefully will get old, elderly,
Yeah.
and we might need assistance in living. And I'm so passionate about this because I have neighbors, they're older, they're taking care of themselves, and I'm thinking they need a nurse, they need a sitter. I had to physically go and assist, and it's like we don't even realize that we may need long-term care insurance. Okay? Long-term care insurance. Now, we might think the government will give us Medicaid. We will get Medicaid. If we can't afford, we'll get Medicaid. But we don't have a choice as to if we have to go to a facility. There won't be a choice as to where. You could be living in Florida and you end up going to another state. Now you have no one to visit you because it's so inconvenient and expensive. And if you had long-term care, now you have a choice as to where you're going, So that is something for, people thinking of retiring and get, you can even start thinking about it from you're younger, because it will always be cheaper, But people that's in their 40s and so on, we need to have them understand that this is also important. And if it is that you're thinking Medicaid will cover you, you won't be able to be covered if you have money saved up in the bank for your children, right? They're going to see that and tell you have to use that first, And if you own a house, you own a house, that is also another cash basket. You're thinking to leave it for your kids or your grandkids or someone that you love. All of a sudden, you cannot, because you now have to go to a home and the house have to be sold. So the beneficiaries are out of this. You understand? So you have to prepare by paying small payments for long-term care if you so need it. And then you can leave your things to your beneficiaries instead of the state taking it out. Now you're insured for small payments to be covered and still be able to leave for your beneficiaries. So that's just something I had to throw in there because it just came.
Yeah,
it's not popular, but it's
I want to know. You just said something, and it catch my attention. You own a house, right? And the house, after you leave, it's going to be passed on to the children, right?
Yes, we hope.
Yeah. So I just want to understand what was I didn't get you when you were
Okay,
explaining
I will.
about
Mhm.
yeah the life insurance problem. Maybe you have a bank account in the house.
I'll say it again.
So yeah,
No, not
what?
quite. So,
Okay.
if you are an elderly person, or even if you're not, but you are unable to, take care of yourself, cook your food, you
Okay.
need someone to watch you, maybe you
Oh, okay.
blind or so on, you're incapable of taking care physically of
Categories.
yourself,
Yes. Okay.
and you're looking to get some help from the
For
federal
government.
government,
Yes.
whether they're going to come into your home, or usually it's to go to a facility, right? A elderly care
Yes.
home or
Yes.
assisted
Yes. Yes.
living. Now, some people do not have a policy to help them with that,
Yes.
right? They
Okay.
call it long term care policies. They don't have a policy to help them with that. And that could be 90,000 a year. It
Hmm.
could be more, it could be a little less, depending on where you live. So if you own a physical home, and you all of a sudden you're 60, and you're incapable of taking care of yourself, and your kids are not able to physically
Oh.
care for you
Okay.
themselves, and you need to be taken to a home, a facility,
Hmm.
who's going to pay for that? You own a house, but you are not able to take care of yourself living
So
in that
and
house.
now that your children. Wow.
Neither can your kids.
Wow.
So the only thing is, you need assisted living. And for you to pay for that, you need insurance. You need long-term care insurance. If you don't have that,
Hmm.
Medicaid will take care of it. But if you own the house, that is something they're thinking they are can be sold to pay, instead of them, the government, taking it out of their tilly to pay
Wow.
for it. You are going to have to sell your house to pay for it.
Hmm.
Okay. If
Wow.
you gift your house within, I would say, within 6 years of you asking, and this is what's on the record, if you gift your house to
Hmm.
your kids or whomever within 6 years of owning it, and now within 6 years of needing to get Medicaid, then the government can still go after whomever you give that house to. Even after you have passed, they can still do that.
Oh. So, but
Some
if
states are very cold with that. I call it
wow.
cold, but it's the policy. It's it's what we have to go by. But as you say, giving information will let someone stop to think as to how they're doing things.
Yes.
You might think, oh, I have Medicare, but Medicare might help you if you were hospitalized for 2 years. So
Yeah.
what happens after that? You're going to need Medicaid. So if you have a bank account that you didn't want to use to
Hmm.
pay for that, you're thinking Medicaid, you need to stop thinking about that, because it's not going to work that way. You're
Hmm.
going to use what, if you're going to give it to someone and it shows a chain, well, cash is harder to prove what you did with your cash, right? But the house, they can prove you had this house less than 6 years, and now you're asking for Medicaid.
Hmm.
To them, it is that you're trying to trick the system.
Yeah.
So you understand. So they're going to go after whomever you sold it to. And some
Hmm.
states do that.
Wow. Wow. So it means once you don't have personal insurance, life
Mm-hmm.
insurance,
Mm-hmm.
if that happened in your case, it means you either sell the house or
Mm-hmm.
probably or the government is going to take it and pay
Yes.
off whatever annual cost and
Yes.
then take you to another old folks home or something like that.
Yes.
Yeah, so
Yes.
it
Absolutely.
sound like I was telling somebody like if you listen to the policy, I'm
Mm-hmm.
talking about the maybe if you listen to some people's story and
Mm-hmm.
look at the policy that are the life insurance policy, and then you ask a question, why this person did not do this,
Yes.
why they were young.
Yes.
So, as we are talking on the partnership forum here, and we're talking about life insurance, and
Mm-hmm.
life insurance with life benefits.
Yes.
So, before we can go for our break, I want to know I think the third question I didn't get it clear, so I wanted to know
Okay.
how much life insurance coverage does someone actually worth someone need and not what we need.
Well, when you talk about what you need in coverage, it's based off what it is that you want to take care of, what you want to be responsible towards. If you have dependents that's going to college or they're in college, you want to have enough coverage that will benefit them. If you have a house that is not paid off, you want to have enough to pay that off if you were to pass. If you have an
Okay.
elderly parent that you're taking care of, and you just don't know if you may pass before your parent, you may want to consider what could help them to take care of them. So it's not a matter of one size fits all. You're just going to get $500,000. Maybe you need $1 million. Maybe you only need $250,000
Yeah.
as a death benefit. And it depends on what you want to leave your kids also. If you qualify to get it based on your income now, and because it's so low, it's easy to qualify for a lot of term life insurance, right? That you can leave for your kids. So you can use term life to take care of those things after death that you may not cover.
Hmm.
Whole life, on the other hand,
Hmm.
whole life, on the other hand, is where if the kids are, you can start from the child is 2 weeks old, right? And if you have purchased for the child whole life insurance from they were babies, say for example, you got whole life for someone that is 1 year old, by the time you may be paying $2,000 every year. Let's put it yearly so it's easier to understand, because we all have kids and we get tax returns
Yeah.
which benefits, with
Hmm.
benefits that's typically coming because of the kids, right? A lot
Yeah.
of times. So say you get back a return of $2,000 every year. You have a child, 1 year old. You start paying $2,000 every year, even if it was you can pay monthly. But I'm just saying, some people may consider paying $2,000 every year for that child from their one. When they are 15, they already have $30,000 in their whole life policy that you have purchased for them as the insured. It's your
Hmm.
policy. You're the owner, you're the payer, but they are the insured. So you're doing it for your kids, for example. So that is something that can benefit them. So when they're 21, they probably have $100,000. Do you understand? And so on and so forth. And so by the time they're 40, they probably have $400,000, and maybe the policy started from 100,000.
Hmm.
So the dividends and the compounding effect, that is something that you're built up and put together for your kids, and you
Okay.
started early. So in doing that, you don't have to consider being covered with term life for everything,
Hmm.
because with that policy also, the whole life policy, you're starting your kids out. And this is what, let me give you a brief story.
Mm-hmm.
I remember, I'm also a real estate broker. So I've been doing this, been that since 2004. So I have a lot of experience there. But I remember a young man came or into our office. He wanted to buy like a fiveplex property. And we explained to him, he was 21, we explained to him that he needed to have a down payment, right? And so we told him it's 200,000. So he has to show proof of funds. And he said, I need only a couple days. Give me a couple days. He left and he came back. And do you know what he did? He showed us that proof that he could come up with that $200,000. And so the question was, how did you do that? So
Hmm.
he said his family, he's Jewish by origin, that's his
Yeah.
birth. So he said his family saved money through the whole life policy from they were younger. So him being
Wow.
21, It's like it has built up to that stage the cash value on this policy that he can access. He doesn't have to qualify for it by his credits. He doesn't have to prove his income. This is something his parents did for him. So at 21, he's able to invest into real estate that is so much that even someone working for 40 years cannot. And he's 21, being able to put that
Wow.
payment down on the house, on this duplex, and investing into something that's going to make him so much more than that 200,000, you know. So this is how powerful it is to start our kids off with a small policy. But because they're so young, it will benefit them in terms of legacy way down the road, or even sooner than later. It could have it's better than the 529 plan
Yeah.
for education purposes. This is so much better. They can do anything. Start a
Yeah.
business, buy a house,
Hmm.
you know.
Wow.
Yeah. That's whole life.
Wow. That is serious. So, we take our break and then we come back to go for our last two questions. Quick.
His hands are not short that it cannot reach to you. His eyes didn't look like he cannot see your teeth. His ears have no day that he cannot hear you cry. Your tomorrow must be greater than today. Your tomorrow must be greater than today. No matter what comes my way.
Well, want to say thank God and thank you again. Not to waste our time.
Yes.
Those of us who are out there, trafficking is real. Trafficking is real, and we want to say, be mindful. Though, when your kids go out there to school, or probably when you are on the bus, when you're on the train, when you're on the road, when you are called to go to school, probably maybe scholarship. Be careful because trafficking is real.
Yeah.
Okay, quickly, we are back with our guests. I look at the policies, and the explanation is blowing my mind off, even though I've been reading about it. And like the one you just explained, people who would look at their children age, and sometimes we don't realize that, especially African, especially those of us who come from different part of Africa, or the mentality because of the kind of country we live in and the way we're brought out, when we
Yeah.
see the other guys, well, the different, maybe white or the color or the way, but we don't realize that most of them are living on their parents' sweat.
Yes.
They started from there.
Yes.
Like for us, compared to African, after the parents leave, we start struggling on our own. There's
Yes.
nothing.
Yes.
and
From
that goes a cycle. So it's time for us to begin to open our eyes. While technology is advancing, everything is, you can access something quickly than the past 10 years ago.
Yeah.
So we are encouraging people as we talk on these issues of life insurance to begin to look towards how can we think about keeping, not looking for the past, not waiting for the end. Anytime something can happen. I might be talking here today. We all know about death is not written on the face. It's not
Yeah.
even something. If it were written up, if God was saying to us, "Well, Travis, tomorrow we were definitely going to simply give me another. I stick out a job and say, give me another time." So it's not like that. So we want to encourage as we go into the next two questions. We want to encourage those of us who are listening, who will be listening, that it is time for us to
Yeah.
begin to think that this is serious. Even if the $50, even the $25, even whatever we can,
It's $13.
we have, yes, we have, like,
Yes.
look at you see up to 90, some people 10, 50. Let's look for something, even if we want a life benefit. Let's look for
Yeah.
something that tomorrow when something happened, my friend, when I can remember when people are demise, when people leave this world,
Mhm.
on something unexpectedly, and they leave their children. You know why people
Mhm.
cry? I was laughing and joking some other guys.
Ah,
I say, you know why people cry longer, and they're not only crying for one thing. They are crying why the person dies out of so soon, or they didn't leave anything.
what are they
Where
gonna
we
do?
get the money from to bury them? How the cry can be longer, and the too much depression can
Yes,
be. But I can see when I came to the state. I see sometimes when people go and you see people drinking and laughing, and
yes,
so in case you telling them,
yes.
oh, I'm sorry.
Because
Oh, he going to be with the Lord.
yes. So
They're not even.
if they had insurance, then someone
Yes,
like me would be going to meet the family and letting them understand how to access all of this. And
yes.
so it is a whole difference, than you're left on your own to figure it all out. And
So
it was so simple. And
yes, and
you know,
what I want to ask before we go to
mhm,
this second to the last question is,
mhm,
I've been thinking about it because a lot of things happen in the West and other places in the world that people take
yeah,
advantage of the children. People take advantage of some of the beneficiary after the
yeah,
person is gone. What are some of the protections? Because I will tell you that most
mhm,
people are skeptical.
mhm,
But if they leave, if something happens
mhm,
to them, if they get involved, if something
mhm,
happens to them, and one of the big
what's that?
brother up there see that they
Mhm,
take advantage of the kids because they are little kids and the wife.
mhm,
So what are some of those mechanisms? Because on the human rights side, we talk about protection, we talk about right,
yes.
we talk about, and we want to make sure that look, if every person was right but be
Mhm,
protected. If the wife was left with nothing, or the wife, the husband left her, we know that all the benefit need to go to the wife.
yes.
The wife need to
So
decide. So
so
what
what you can do.
goes
Mhm,
because going to the insurance and filling your form and doing
mhm,
everything is between the insurance and me. And I
yes,
did tell my children, right? But
yes.
remember that when something happens, and what happens is that the insurance will actually think,
Mhm.
well, who? I want to know what is
Well,
behind it.
this is how it would be. If you
Okay.
have a policy, you have a life insurance policy with our company and pretty much any insurance company, you have to state who your beneficiary or beneficiaries are. It could be 10 and everybody getting 1/10, or you break it down however you want percentage wise, or
Mhm.
it could be two persons, or it could be one person. So if you have a 10-year-old, of course, they're not of age. Obviously, if you weren't here, they could not physically take care of themselves or spend
Yes.
their money. But you would, in fact, put them as the beneficiary on the policy, right?
Yeah.
And
Mhm.
you have to further go on to create a will, have people like us help you with putting a will together,
Yes.
and state exactly who it is that would be taking care of that child if something was to happen to you. And
Hmm.
of course, it has to be someone that you trust. Now, if they have changed in
Hmm.
how they used to be with you, there really isn't anything the insurance company can do. But
Yes.
the money will be in trust for the child. So the insurance company would have to then have
Okay.
the will and get all this stuff to show that this person is, in fact, the person that is responsible for that child, as
For
well
that
as
time.
there is things that you can set up in place, even with the insurance company, as to in terms of who to pay and how to pay them. You can have people, insurance have, oh, we'll pay 10% of it this year, 10% of it next year, 10%. And even when the child gets to 18, then they
Yes.
can say, give them the bulk of the money.
Yes.
So there are options. You can have trustees that
Yes.
manages the money also. So that's also something that I, not through my insurance company, work on, but
Yes.
from the other side to help people put their trust together on their
Yes.
house or for their personal, things. So
Yes.
that is something. You can have a trustee that has nothing to do with your family, that is not going to be the person spending the money, but they would be responsible in how the money is put to the person
Yes.
in the order
Yes.
that you would want it done,
Hmm.
right?
Okay. Okay. Okay.
So there are
That's
ways.
that's one of the clarity that I wanted, because it's something that uh
Mhm,
the beneficiary and to know that
mhm,
they are on obligation, I mean the insurance company, they are on obligation to make sure that
mhm,
at the end of days when something happens,
mhm.
who will be actually the right person to deal with. That is very
Yes,
important. Yeah.
yes.
Okay.
You can
The next
change
question. Yeah.
whenever.
The next
Mhm,
question is
mhm.
how much is it? It's okay. Yeah. The next question: how can someone use insurance to build wealth passive
Well,
passively?
this is a segue in essence from what we were talking about regarding the kids and so on. But if we're talking about us as adults, then it's similar for the children, but it builds faster for them. But if we're looking for something that we personally want to use, we want to get, say, whole life insurance. Let's use
Mhm.
whole life insurance right now. We can get whole life insurance with which has a savings portion and it has
Uh-huh.
a death benefit portion to
Yes.
it.
Mhm.
Okay, so when you put in a certain amount into your policy, whether you're paying for a fixed period like 10 years, like a customized whole life, or
Yes.
you're paying for a small amount for all of your life,
Hmm.
you can actually get the benefit of it. Say, for example, how you can build wealth passively. Most of us, when we're 40-year-old, we may, I'm hoping and thinking that we probably save $20,000. We're able to save $20,000. Let's say that, for example.
Yeah.
So if you have saved up when you're 40, $20,000, and you can't seem to go beyond that, because you're taking it out because it's so accessible, it's just sitting in your savings account or a
Yeah.
CD, which you're not really making as much, but you have it in your savings account. So you keep pulling for every little thing. It's so accessible.
Yeah.
So one of the thing is, I would suggest have a checking account, have a savings account with just your regular, groceries, so on. But the majority of your money, if you have 20,000 saved, you say, for example, you're going to put 10,000 into a whole life policy
Yes.
every year. Every year you commit, it could be any variation of that, 5,000, 3,000, whatever. But say you decide to put 10,000 into your a whole life policy yearly. The
Hmm.
first year you put $10,000, for example, in that policy, you will have access to, say, 50% to 90% of that. It depends, right?
Yeah.
But say you have at least 50% access. You put it in today, in 2 weeks, you can take $5,000. Say, for example,
Hmm.
you had a credit card, you're paying 18%, 24% interest, and
Yeah.
you owe $4,000 and you're trying to pay it down. You're paying maybe $200 every month to that card. Now, if you had that extra 10,000 that you open your whole life policy with, and you now have access to $5,000, that if you borrow it from yourself, you'll only pay maybe 4 to 5%. Why would you not then take that $5,000? As a matter of fact, you owe 4,000 on your credit card. Take $4,000 and pay that card off completely. Now
Okay.
you are paying 18% on the card. If you borrow from yourself, the interest that you probably will have on that is like maybe 4 or 5%.
Yeah.
So it makes sense to take your $4,000 from your whole life
Yeah.
loan, borrow from yourself
Yeah.
at a cheaper rate and pay
Hmm.
off that card.
Yeah.
Continue to make that $200 payment every month back to your insurance, right?
Yeah.
Towards what you have borrowed to
Yeah.
continue building. The
Yeah.
next year, you put another $10,000 in there. It's
Yeah.
already compounding.
Yeah.
You're also getting dividends on that. It's
Yeah.
not that you're physically taking out the money to break
Yeah.
the chain of the compounding effect. You're
Hmm.
literally borrowing it from the insurance company,
Yeah.
right?
Yeah.
You're borrowing it. They're not taking it from your money, but they know you have it. So
Sure.
you're in essence borrowing from yourself. So it stays there and compound. So by the second year, you have access to maybe 20, I would say $19,000.
Yeah.
It stays there. You could borrow that. Maybe you have a car that you owe $10,000 on, and you're paying a high interest of maybe 9% or whatever it is. Now you can borrow from yourself and
Mm-hmm.
pay 3, 4, or 5% to
Yeah.
yourself,
Mm-hmm.
instead of paying $500 every period you're making payments to that car. You can now pay towards your policy and take the cash out, or take a portion of it and pay it off. Continue to pay those small payments you were paying, the $500, pay it now into your insurance policy. So you
Okay.
continue building. So by
Yeah.
this, the third year, you put another 10,000. You're looking at least access to $25,000.
Okay.
And so it stays and builds, and it builds very quickly, because
Okay.
you're paying maybe yearly, or the amount you're paying into
Yeah.
this. But consider it as your savings policy,
Yeah.
because you can access cash from it at a lower interest rate. And as
Okay.
a matter of fact, you do not have to pay if you have $10,000 and you borrow 3,000 to do something that you figure you want to do. You go travel or do something,
Yeah.
right? You do not even have to pay that back. It can be taken out of the death benefits once you pass. So the death benefit continues to grow also and accumulate because of the dividend that's added in and
Okay.
compounds, right? So you could have started off with a the 10,000, you went to 20, 30, and your face value may have been, say 150,000. Now, by your 30 or so, that could have increased to maybe 140,000. So it's not,
Okay.
if you started at 100,000, it could go to 140,000, after so many years, and continue. So sometimes if you live for 40 more years, you probably have tripled whatever the face value was as your death benefit. So if you borrow money from yourself to do whatever, you can always have it take out at the end. So you don't even have to come up like immediately,
Oh,
to pay back.
wow.
So you don't have that stress of that,
Wow.
but you don't want to take all of it, all
Yeah.
of your cash benefit, because that's like surrendering your policy. So if you have $40,000 in there that you can access, you don't want to take all of that, unless you're going to take 39,000 and pay it back somehow, but you don't want to take everything one time, because that will end your
Okay.
policy. But that's how you can use it and keep paying towards it small as you used to.
That's like saving. That's like that's having the saving out of the bank account. But then this is like it's for you, and
Exactly.
stay. You can go back, and while you are living,
Yes.
that's a very nice policy. Oh,
Yes.
and those of us who are listening in our last, let go quick to the last, but um, again, we are here talking about life
Mhm.
insurance, and our last question today for our guest is life insurance taxable? It's one of the most important, because America,
Oh yes,
everything
oh yes.
is
And
taxable.
when we talk about that same whole life, because it's so popular, when you take the money out, it's not, you don't have to pay tax on the money that you borrow from yourself. You don't pay taxes on it. You just get the money and you use that. Now, if you close the account, that's a whole different thing. They're
Okay.
gonna appropriate what they have put onto it in terms of interest and so on, and the difference you have to pay like taxes on, right? So you have to know if you're closing the account
Yeah, you're closing your
before
account.
you die,
Oh, okay. Yeah,
so then
some
you
people.
pay taxes. But outside of that, the loans that you'll be taking from yourself, you don't pay taxes on that. Life insurance proceeds also are generally not taxable. So if you have a term life and it's a death benefit to your beneficiaries, they don't pay tax on that, as well as any benefit you get from these policies. You are not going to pay taxes on it. Your beneficiaries, that is, they won't. It's
Wow.
tax free to them. They get all of the money and they don't have to pay tax. So it's a tax haven.
Hmm.
And while you are putting your money in there in your whole life policy, it is you're not paying taxes. So it continues to grow even more abundantly and compounds even more effectively. You know, the
Hmm.
dividends you're not paying taxes on. So you're only going to do that if you close it out prematurely, right? You
Okay.
have to pay taxes on the difference of what you put in and what they gave you in terms of interest and dividends. Right.
Oh, it's so clear.
Yeah.
It's we're gonna be talking more about it out here because of the time. But
Yeah.
again, those of us who keep listening, it's interesting to know that many people have been just in the dark, and we need to have more education here.
Yeah.
We're going to be coming in and out here to talk about it. And not to waste our time, let me go to the guest and just you might have a
Yeah.
parting statement. What do you? How can people get to you? What is your parting statement of the to the public? Wherever this step is going, what can you say to them? What do
Well, in
you have
terms of for them to do
to
something.
contact you to
Oh, yes,
what are
yes.
some of the things
Oh,
that is
well, you know, the easiest is to get me. My cell is I answer my calls, or you can text me, and my
okay.
number is 954-648-6351. That's 954-648-6351. So you can call me, send me a text message, you know, let me know you were on the program and you would like more information. We set up an appointment convenient to you and we do a Zoom, and I can literally show you how the numbers work and all the other things that, you know, you need answered.
Oh, so clear. So you can also if you can get to her, you can also contact through me, and I can just probably link it to her, and then you guys can talk about it. But I want to encourage those of us who are out there and those of us who will be listening. Sometimes people play less, everybody busy, but this is very essential, very, very
Mhm.
important. We'll be promoting. We talk more about it. Do I have another meeting coming up? But we're going to talk more about some of these things because it's very important. That's what I connected to you guys and who have the expertise and talking for people, advocating for the rights of people with me,
Mhm.
not only for their living, but after they have gone, what
Yeah,
happened to the benefits of beneficiary? Because
yeah,
many people leave this earth with money in the bank, money somewhere, nobody know about it. Somebody
uh,
take advantage, and we want those are things that are very important. I want to
you're
thank
so
you,
right.
for actually accepting the invitation,
Mhm.
and I know that this is going to go a long way. It's going to be a more talk. We're going to have more interaction. We want to have some of the guests coming in with community leaders who can talk to their community to get involved, so
Yeah,
that we can get our people to know more about this, and then most of them who will decide they will get into it. Okay,
that's
so God bless you, and I want to thank God again for those of us who are listening, those of us who are following. Thank you, and let us do the best we can in order to change our society. Thank you
yeah.
now, and God
Thank
bless
you.
you. We talk
Thank you.
again all the time.
Yes.
Thank
It's
you.
painting a shore that it cannot reach to you. His eyes didn't look like he cannot see your teeth. His ears are not deaf that he cannot hear you cry. Your tomorrow must be greater than today.